Welcome to Crypto West Coast, where we discuss everything crypto from a Canadian perspective. My name's Damien, and today I wanted to share with you a recent document regarding crypto trading platforms, or CTPs. This is the headline of the document that was co-published by the CSA and IIROC on March 29th, 2021. So who are the CSA? Well, if we go to their website, we find here that the 10 provinces and 3 territories in Canada are responsible for securities regulators. Securities regulators from each province and territory have teamed up to form the Canadian Securities Administrators, or the CSA for short. The CSA is primarily responsible for developing a harmonized approach to securities regulation across the country. And down here, the CSA's impact on most Canadians comes through its efforts to help educate Canadians about the securities industry, the stock markets, and how to protect investors from investment scams. And IIROC, or the Investment Industry Regulatory Organization of Canada, is the national self-regulating organization which oversees all investment dealers and trading activities on debt and equity marketplaces in Canada. IIROC is not a government agency, but it works under the CSA. Before moving any further, we should discuss what a securities token is in Canada. In Canada and the United States, they have two different meanings. So I've created this chart. What is a security? So Canada, we have, if it passes the Pacific coin test, whereas in the United States, they have what's called the Howey test. Let's take a look at Canada. It is considered a security if 1, an investment of money has taken place, 2, in a common enterprise, 3, with the expectation of profit that, number 4, is to come significantly from the efforts of others. If we go to the United States, the Howey test, their definition is 1, is there an investment of money with the expectation of future profits? 2, is the investment of the money in a common enterprise? And 3, do any profits come from the efforts of a promoter or third party? So here's where the difference lies. Is cryptocurrency a security? In Canada, it is yes, according to the Pacific coin test. Cryptocurrencies are primarily considered securities. However, in the United States, the answer is no. Not if it was not involved in an initial coin offering, or an ICO, such that it was not sold with the expectation of a future profit, but rather the value is determined by supply and demand in the market. If it is not a security, it is considered a commodity. So we go to look at the two main cryptocurrencies, Bitcoin and Ethereum. In Canada, yes, Bitcoin and Ethereum are considered a security, and in the United States, no, they are not. So now that we know what a security token is in Canada, let's continue with this document. This notice does not introduce new rules specifically applicable to CTPs, and CTPs are already subject to existing requirements under securities legislation in Canada. Rather, where appropriate, it provides guidance on how the existing requirements of securities legislation may be tailored. This approach allows CTPs to operate with the appropriate regulatory oversight. The overall goal of the approach outlined in this notice is to ensure there is a balance between needing to be flexible in order to foster innovation in the Canadian capital markets and meeting our regulatory mandate of promoting investor protection and fair and efficient capital markets. So this document isn't really putting out any new information. It's simply saying that it provides the guidelines and guidance, and that over time it's willing to make changes to these guidelines, especially in this new emerging market of crypto assets. Let's continue. We note that as this industry is still developing, a wide variety of CTP models are emerging. Depending on the business model and activities conducted by a CTP and the risks it creates, the regulatory treatment of one CTP may differ from another. And further down, the CSA welcomes innovation. We recognize the continued evolution of fintech businesses, the infrastructure that supports such businesses, and both Canadian and foreign regulatory structures. This continued evolution may result in the tailoring of requirements or providing exemptions to accommodate their novel business and any developments, or result in alternative regulatory frameworks. The document continues down the pages and describes two types of crypto trading platforms: the dealer platform, as well as the marketplace platform, and it gives information how to define each one. And eventually we get down here to the application process. It is this application process that may be the most important concern for Canadian investors in cryptocurrencies. You see, Canadian trading platforms will of course join on to IIROC and pay the fees, as Canadians are their customers. But it is these international platforms that may say, we don't need Canadians. They're a small fish in this ocean, and we will limit access to Canadian traders. It was Russell Matthews' YouTube channel that first introduced me to this topic. In his video, he goes into great detail explaining the application process and the amount of money it involves for companies to join, particularly international companies. I suggest you give this video a view, and I've left the link down below. So as this document comes to an end, it focuses on compliant. Part 4, entitled Complying with Securities Legislation, says, as the technology and operational modes of the CTPs continue to evolve, the CSA and IIROC welcome continued dialogue with CTPs and stakeholders on issues that are developing and possible ways of complying with requirements and additional areas where flexibility may be appropriate. And in ending, we remind CTPs operating from outside Canada that have Canadian clients that they are expected to comply with Canadian securities legislation. CSA members may take new enforcement actions or continue existing actions against CTPs that do not and/or have not complied with Canadian securities legislation. So as I've already indicated, this document really doesn't say anything new in the terms of Canadian crypto exchanges. However, the important part for Canadian investors maybe is how this affects international trading platforms. For someone like me who uses Binance to purchase some coins, and then I move it to Celsius Network to earn yield, this may have an implication going forward. Only time will tell. Hopefully everything works out, but until then, I will continue to cost average into this digital asset environment, and we'll see what happens. This is not financial advice. It's only for educational purposes only. But if you like the video, give it a thumbs up, and hope to see you in the next one.